So last quarter, Meta Platforms found $8 billion just kind of sitting in their couch cushions.
Yeah, literally just dropped right into their lap.
Right. It's this casual $8 billion accounting shift. And, most tech companies would take that kind of windfall and quietly pad their margins just to keep Wall Street happy, right?
Oh, absolutely. That's the standard playbook.
But Mark Zuckerberg is doing something entirely different.
Yeah.
He is currently building a $145 billion physical supercomputer.
It's massive.
And the ultimate goal, which is wild, is to disguise this supercomputer as a pair of sunglasses and put it directly on your face.
I mean, it is a phenomenal pivot. If you look closely at the data they just released, this is no longer a social media company.
No, not at all.
We are essentially watching the architectural blueprint for the next computing platform being drafted, in real time.
Welcome to today's deep dive. We are taking the massive, highly revealing Q1 2026 Meta Platforms earnings call. This features CEO Mark Zuckerberg and CFO Susan Lai, and we are basically tearing it down to the studs.
Yeah, this isn't a conversation about ad clicks or, minor fluctuations in server costs.
Right, we're way past that. This is about translating a super dense corporate transcript into a clear roadmap. We want to show exactly how one of the most powerful entities on the planet is, fundamentally transforming the internet.
Because the stakes here are structural. I mean, whether you're holding the stock or you're building tech in this space, or honestly, if you're just someone trying to understand why your digital environment is changing so rapidly.
Which is all of us, right?
Exactly. The capital allocation we are seeing from Meta right now is going to dictate the boundaries of how you interact with information, with commerce, and even with other people for the next decade.
So we're going to look under the hood. We're charting exactly how they plan to integrate what they are calling personal superintelligence into every single hour of your daily life.
It's an ambitious phrase.
Very. But let's start with the sheer gravitational pull of the financial engine funding this. Because, to build a $100 billion future, you need an absolute geyser of cash today.
You really do.
And the headline numbers from Q1 are almost difficult to contextualize. So total revenue hit $55.9 billion.
Which is a 33% increase year over year.
Right. And operating income was $22.9 billion. That gives them an operating margin of 41%.
See, that 41% margin is the number that should make everyone just pause.
It's absurd.
It really is. Operating at that scale, we're talking about an infrastructure that supports 3.56 billion daily active users across Facebook, Instagram, WhatsApp, Threads.
Basically half the planet.
Right. So to maintain a 41% margin while servicing nearly half the human population every single day, it just defies traditional laws of corporate gravity.
Because usually, as you scale up to that massive size, the marginal cost of acquiring and serving the next user drags your efficiency way down.
Exactly. Meta is demonstrating the exact opposite.
And regarding that 3.56 billion daily active user number, Susan Lai did note that it actually took a slight dip in March. But the context there is super crucial.
Yeah, it wasn't user churn.
Right. It wasn't people just getting bored and logging off. It was directly tied to severe internet disruptions in Iran and platform blocks in Russia.
Precisely. If you control for those macroeconomic, geopolitical black swan events, their daily active user growth was actually positive quarter over quarter.
Wow.
Yeah, they've reached a level of market penetration where the only things that can really disrupt their user base are sovereign nations physically cutting the fiber optic cables.
That's just wild to think about. But let's look closer at the net income, because this is where Wall Street can get a little overexcited. They reported a net income of $26.8 billion.
Which translates to a massive $10.44 per share.
Right. Now, anyone tracking the historical performance of this stock knows that an EPS jump of that magnitude usually signals some, underlying structural shift. But digging into the CFO's commentary, this specific quarter has a massive accounting anomaly baked into it, right?
It absolutely does.
So I want to clarify, how much of this is pure operational muscle versus just, tax code gymnastics?
It's a really critical distinction to make. That $26.8 billion net income is heavily padded by a one-time accounting event.
Right. Couch cushion money.
Exactly. Specifically, an $8.03 billion tax benefit favorably impacted the quarter.
And an $8 billion tax benefit isn't just a rounding error. I mean, what mechanism in the tax code triggered a release of capital that huge?
Well, it goes back to a massive structural headache from the previous year. So in the third quarter of 2025, Meta had to record a non-cash tax charge of $15.93 billion.
Ouch.
Yeah, it was painful. This was directly tied to Section 174 of the U.S. tax code, which governs how companies have to treat capitalized research and development expenditures.
Okay, so R&D stuff.
Right. The Treasury Department updated their guidance, and it essentially forced companies to amortize R&D costs over several years rather than just deducting them immediately.
Got it. So Meta took a brutal paper hit last year because of that transition.
Exactly. And what happened this quarter is that based on updated 2026 guidance and some internal restructuring, they were able to partially relieve that massive charge.
Which resulted in the $8 billion benefit.
You got it.
So it's essentially accounting whiplash. Like the government changes the rules, you take a hit, they clarify the rules, and you get some of it back.
Very much, yeah.
But if we strip that noise out of the equation, because we really want to see how the actual engine of the business is performing, what does the real operational profit look like?
Well, if you remove that one-time benefit, you're looking at an adjusted net income of roughly $18.7 billion.
Okay.
Which brings the adjusted earnings per share down to $7.31.
Which is still an extraordinarily aggressive number. I mean, generating $18.7 billion in clean profit in 90 days prove the underlying ad machine is operating at peak efficiency.
Oh, without a doubt.
But the mechanics of how they are generating that ad revenue is where the math starts to look slightly paradoxical to me.
How so?
Well, ad impressions across the entire family of apps increased by 19% year over year, but simultaneously, the average price per ad jumped by 12%.
Ah, right. And that is the paradox.
Right, because in standard economic theory, if you flood the market with 19% more supply, in this case, ad inventory, the price of that inventory should drop.
It should go down, exactly.
The fact that Meta increased the volume of ads by nearly a fifth and advertisers still paid 12% more for them, I mean, it implies a massive increase in the underlying value of those impressions.
It does.
Are they just increasing the density of ads in the feed, or is there a structural change in how these ads are actually converting?
It is entirely structural, and it fundamentally comes down to how their auction dynamics have evolved.
Okay, break that down for me.
So the 19% increase in impressions is not primarily driven by just stuffing more ads into the same amount of screen time. They call it ad load optimization, sure, but the real driver of impression volume is overall engagement growth.
Meaning people are just scrolling longer?
Exactly. Users are simply spending more total minutes inside the apps, and that naturally generates more ad slots without increasing the relative density to, an annoying level.
Okay, so a bigger pie means more slices. But why are advertisers paying 12% more per slice?
Because the expected value of the slice has gone up. Meta's ad platform operates on an auction system based on predicted conversion rates.
Right.
So if an advertiser is selling a $50 pair of shoes, they bid based on the probability that the person seeing the ad will actually buy them.
Makes sense.
Over the last year, Meta's predictive algorithms have become significantly sharper. They're identifying buyers with much higher accuracy.
So the advertiser is perfectly willing to pay 12% more for the impression because the probability of that impression turning into a $50 sale has, doubled.
Exactly. Susan Lai mentioned better macro conditions and currency tailwinds, but the undeniable core truth is that the targeting algorithms have fully recovered from the privacy changes of the early 2020s.
Right, the whole Apple iOS privacy nightmare.
Yeah, that's in the rearview mirror. The algorithms are now operating at a whole new level of precision.
So the immediate question naturally becomes, how are they driving that core engagement growth? I mean, if they're keeping users on mature platforms like Facebook and Instagram for significantly longer periods, they must have altered the fundamental chemistry of the content feed.
And according to the transcript, they absolutely have. Meta's AI isn't just a chatbot anymore. It's the invisible hand curating your reality.
The engagement data tied directly to their AI ranking improvements is arguably the most bullish indicator in the entire earnings call.
I would agree with that.
Let's look at the specific metrics. In Q1 alone, Instagram saw a 10% lift in time spent on Reels, directly attributable to AI ranking upgrades.
10% is huge.
And Facebook saw an 8% increase in video watch time globally. Now, an 8% jump might not sound like a revolution to a layman, but they specifically noted this is the largest quarter-over-quarter gain in video watch time they have seen in 4 years.
Right, and for a platform as saturated and mature as Facebook, suddenly squeezing 8% more time out of the global population is a tectonic shift.
Finding new growth on Facebook is like trying to find new real estate in Manhattan.
That's a great way to put it.
You can't build out. You have to build up.
And the way they are building up is through a deeply technical shift in how their recommendation engines process data. CFO Susan Lai used a very specific piece of engineering terminology here.
Yeah, she credited the engagement leap to their success in doubling the length of user interaction sequences.
Right, the interaction sequences.
I want to stop right there and unpack that phrase, because doubling user interaction sequences sounds like, dry technical jargon.
It does.
But it is actually the key to understanding why your feed feels so much more addictive lately. Let's step away from the Wall Street terminology. How does that mechanism actually function in the context of my behavior on the app?
So to understand it, you have to look at how recommendation algorithms historically managed memory.
Okay.
In the past, the AI had a relatively short context window. If you logged onto Instagram, the algorithm would look at the last, say, 50 things you liked or watched, maybe spanning the last week, to decide what to show you next.
Which makes sense. It was effective for immediate short-term interests. Like if I watched 3 videos about baking bread on Thursday, I was going to see a lot of sourdough content on Friday.
Right. It was highly reactive.
Extremely reactive.
But human behavior isn't just reactive, right? It's cyclical and deeply nuanced. What Meta has done by doubling the interaction sequence is essentially expanding the algorithm's longitudinal memory.
It makes me think of a detective building one of those massive string boards on a wall.
Oh, I like that analogy.
Like the old algorithm was a beat cop just looking at what happened on the street corner yesterday. But this new doubled sequence is the lead detective looking at thousands of data points, stretching back months or even years, finding the invisible correlations.
Yes.
It's not just remembering that I like basketball. It's remembering that every time I watch a specific creator's basketball highlights on a Tuesday, I almost always end up watching vintage 90s sneaker commercials an hour later.
That is an excellent way to conceptualize it. The mechanism they use to achieve this involves massive vector databases.
Vector databases, right.
Every action you take, a like, a linger, a comment, a quick scroll, is mapped as a mathematical vector in a high-dimensional space. By doubling the sequence, they are feeding twice as many of these behavioral vectors into the model at inference time.
Wow. So the AI is drawing connections between seemingly disparate interests over long time horizons.
Exactly. Susan Lai mentioned they're applying advanced content understanding techniques to recommend new posts, even if you haven't engaged with similar content recently.
So the AI basically knows you will like it before you do.
Yes, based on deep, latent patterns in your historical sequence.
And the numbers back up how effective this predictive capability has become. They noted that same-day posts, meaning content that was literally published within the last 24 hours, now represent more than 30% of the recommended reels you see on Instagram and Facebook.
Which is incredible.
It's double the volume of same-day recommendations compared to last year.
And that fundamentally changes the value proposition of the platform for creators.
Exactly. The AI isn't just relying on historical, proven viral hits from 3 weeks ago to keep you engaged. It is indexing the world in near real time.
Yeah, mapping a video uploaded 10 minutes ago against the deep psychological profiles of 3.5 billion people.
And distributing it instantly to the exact subset of users whose interaction sequences indicate they will watch it.
But, to feed an engine that hungry, you need an almost infinite supply of high-quality content.
Right, you need fuel.
Exactly. And that brings us to the translation data point, which is where the AI's impact moves from curation to actual content generation.
This was the metric that genuinely stunned me. Over 500 million users on both Facebook and Instagram are now watching AI-translated and dubbed videos every single week.
500 million weekly.
If you want to understand why their engagement is spiking, look at the supply side. Historically, the internet has been highly fragmented by language.
Very true.
Like, if a creator in Japan makes an incredibly engaging, visually stunning reel, its maximum potential audience is limited to Japanese speakers. Even if the visual content is universally appealing, the language barrier creates a hard ceiling on engagement.
But Meta's AI is now systematically destroying that ceiling. We aren't just talking about automated subtitles here.
No, this is way beyond that.
We're talking about deep learning models taking the original audio, isolating the voice, translating the speech into English, Spanish, or Hindi, and then synthesizing a new audio track that matches the original creator's tone, pitch, and even the emotional cadence.
It's basically a real-time universal translator. And doing it seamlessly enough that 500 million people are consuming it weekly without even really thinking about it.
The inventory unlock there is staggering. Suddenly, that Japanese creator's video goes from a potential audience of 120 million people to a potential audience of 3 billion people.
So Meta is using AI to artificially expand the global supply of premium content, which gives their recommendation engine infinitely more options to find the perfect video for your specific interaction sequence.
It's a brilliant flywheel.
Okay, so the business logic is airtight. Better memory equals better recommendations. Better translations equal more content. Engagement goes up, ad prices go up, revenue explodes. It is a beautiful, self-sustaining loop.
On paper, yes.
But, and this is a massive but running real-time vector analysis on 3.5 billion users, while simultaneously voice cloning and dubbing millions of videos a day. The underlying physical infrastructure required to do that is mathematically terrifying.
Terrifying is exactly the correct word. The compute requirements are astronomical. And this is where the earnings call shifted from a celebration of ad efficiency to a stark, unblinking look at the brutal physical realities of the artificial intelligence arms race.
Which takes us to the great infrastructure pivot. This was the moment in the transcript where Wall Street analysts likely spilled their coffee.
Oh, I'm sure phones are ringing off the hook.
Mark Zuckerberg and Susan Li announced that Meta is drastically increasing its capital expenditure guidance for 2026. They raised the projected range to an eye-watering $125 billion to $145 billion for a single year.
Just for CapEx.
Yes. Furthermore, they disclosed a $107 billion step-up in multi-year contractual commitments specifically for cloud deals and infrastructure.
You really have to linger on that number. $145 billion in CapEx. For context, the entire Apollo space program, adjusted for inflation, cost roughly $250 billion over a decade.
Wow.
Meta is preparing to spend more than half of that in 12 months.
I look at $145 billion and I see a company that is essentially building an entirely parallel global utility grid.
That's practically what it is.
But that level of capital destruction usually triggers a shareholder revolt. I mean, the depreciation alone on that hardware is going to be a massive drag on earnings for years unless the return on investment is immediate and overwhelming.
It's a huge risk.
Why isn't Wall Street violently punishing them for this kind of spending? Are they just shoveling cash into a furnace of server farms out of FOMO?
Well, the depreciation is exactly the risk factor institutional investors are tracking, but you have to offset that fear against the concept Susan Li repeatedly highlighted on the call, which is inference capacity.
Right, inference.
If you don't understand inference, you really cannot understand Meta's valuation right now.
So let's dissect it. I know the market generally understands that training a large language model requires massive clusters of H100 chips running for months.
Sure.
But why is Meta specifically struggling to balance their compute loads?
It comes down to the difference between training and inference at Meta's specific scale.
Yeah, lay it out for me.
Training the next generation of their model, Llama 4, for example, is an incredibly resource-intensive but ultimately finite process. You build the cluster, you feed it the data, you run the math, and eventually the model is trained.
Right. It's a one and done, sort of.
Exactly. But inference is what happens after the model is deployed. Inference is the computational cost of the AI actually answering a question, dubbing a video, or running that deep sequence vector analysis to choose an ad.
Right. So training is building the engine, and inference is buying the gas to drive the car every day.
Exactly. And Meta isn't just driving one car. They are providing the gas for 3.56 billion daily users.
That's a lot of gas.
Susan Li was remarkably candid on the call. She admitted that they continually underestimate our compute needs as AI use cases multiply across the company.
Wow.
Every time they launch a new AI feature, even something as simple as AI-generated sticker packs in WhatsApp, the real-time inference load spikes massively across their global server footprint.
So to prevent the entire ecosystem from just grinding to a halt due to compute bottlenecks, they have to pre-purchase an unimaginable amount of silicon.
They have no choice.
And it isn't just buying off-the-shelf NVIDIA GPUs anymore. Zuckerberg explicitly highlighted that they are rolling out over 1 gigawatt of their own custom silicon.
A gigawatt?
A gigawatt. We're literally talking about power measurements used to describe nuclear reactors. What does a 1 gigawatt data center footprint actually entail in the physical world?
It's a logistical leviathan. Deploying a gigawatt of compute isn't just about buying the chips. It's about the physics of power and thermodynamics.
Right, you can't just plug that into a wall socket.
You're talking about securing massive tracts of land near high-voltage transmission lines. You're negotiating with regional energy grids to ensure you don't brown out a small city.
Oh my God.
You have to build custom electrical substations, deploy advanced liquid cooling infrastructure to prevent the chips from melting, and manage the massive problem of stranded power.
And to mitigate some of the costs and the supply chain chokeholds, they are moving heavily into custom silicon, specifically their MTIA chips or meta training and inference accelerators.
Right.
They mentioned deep partnerships with Broadcom and AMD.
Which is a highly calculated defensive maneuver. Right now, NVIDIA holds a near monopoly on the high-end AI chip market, which gives them immense pricing power.
And Meta is one of NVIDIA's largest customers.
Yes. But Meta cannot afford to be entirely beholden to Jensen Huang's pricing strategy for the rest of the decade.
No way.
By co-developing custom MTIA chips tailored specifically for their unique recommendation and ranking workloads, they are optimizing their total cost of ownership.
So the MTIA chips might not be as universally versatile as an NVIDIA H100.
Right.
But for the very specific task of running Meta's ad algorithms, they are significantly more power efficient. So by securing $107 billion in multi-year deals now, Meta is building a physical moat. While their competitors might find themselves stuck in line waiting for chips or scrambling to secure power permits in 2027, Meta will have the sheer computing muscle already online and humming.
They are absorbing the capital hit now to guarantee strategic supremacy later.
It is a massive bet on the inevitability of highly pervasive AI.
It really is. Zuckerberg stated, "We are investing aggressively to meet our infrastructure needs and ensure we maximize our strategic flexibility over the coming years." They are building the railroad tracks before the train is fully designed.
But they do have a prototype of the train, and it is moving incredibly fast. So what exactly is this gigawatt of custom silicon being built to run? That brings us to the core software revelation of the call, the debut of Muse Spark and the Meta Superintelligence Labs.
The formation of the Meta Superintelligence Labs, or MSL, was the centerpiece of Zuckerberg's opening remarks. He announced the release of Muse Spark, which is the first foundational model to emerge from this new division. What is truly notable here from a development timeline perspective is that he highlighted they built the lab, consolidated the top-tier talent, and produced a world-class model in exactly 10 months.
In the current AI arms race, 10 months is a blistering pace.
It's unheard of.
And Muse Spark isn't just a research paper. It is already deployed in the wild, powering the Meta AI assistant across WhatsApp, Instagram, Facebook, and Messenger.
Everywhere, basically.
But looking at the transcript, what fascinated me wasn't necessarily the technical benchmark scores of Muse Spark. It was the distinct, deeply held philosophical approach Zuckerberg is taking toward artificial intelligence.
Yeah, it stands in stark contrast to the rhetoric coming out of competitors like OpenAI.
Right, so what's the divergence there?
The philosophical divergence is vast. Much of the broader industry discourse right now is fixated on artificial general intelligence, AGI, as an autonomous, almost centralized entity that will eventually automate and replace human labor.
Right, the whole AI will take our jobs narrative.
Zuckerberg explicitly rejects that framing. He stated on the call, "I hear a lot of people out there talk about how AI is going to replace people. Instead, I think that AI is going to amplify people's ability to do what you want."
It's a critical distinction in product architecture. If your fundamental belief is that AI should replace humans, you build systems designed to operate entirely independent of human input.
Right.
But if your philosophy is amplification, you're building tools designed to be wielded. Like Meta isn't trying to build an autonomous agent to go live your life for you. They want to give you a personalized, highly capable assistant so you can pursue your own goals with superhuman speed.
Exactly. Zuckerberg framed it through the lens of historical human progress. He argued that progress has always been driven by individuals pursuing their unique aspirations, and he envisions a future where people, augmented by AI, become more important to the economy, not less.
But executing that philosophy requires a completely different approach to user interface and user experience.
It does.
Which brings us to what we could call the mom test. During the Q&A portion of the call, an analyst asked Zuckerberg about the proliferation of other consumer AI agents, specifically bringing up open source models like OpenClaw.
Right, OpenClaw.
And Zuckerberg gave a response that perfectly encapsulates Meta's consumer strategy.
He was highly pragmatic. He acknowledged that open source models like OpenClaw are fascinating glimpses into raw capabilities, but he accurately pointed out that they are completely inaccessible to the general public.
Right. To get any real utility out of a raw model like OpenClaw, you need to understand prompt engineering. You need to know how to set system prompts, tweak temperature parameters, and essentially code the AI's personality before you even ask it a question.
Which no normal person is going to do.
Exactly. Zuckerberg explicitly said there are very few AI agents out there right now that he would be comfortable handing to his mom.
And that is the UI/UX challenge of mainstream AI. Making an AI feel frictionless to a non-technical user requires an immense amount of compute happening silently on the back end. When a normal person asks Meta AI a vague, poorly phrased question on WhatsApp, the model has to autonomously re-engineer the prompt, infer the missing context, fetch the necessary real-time data, and present the answer in a natural, conversational tone.
Meta is taking on the massive computational burden of translating human messiness into machine precision so the user doesn't have to.
Precisely.
They want the assistant to be so polished that your mom can use it to plan a complex vacation itinerary or resolve a customer service dispute as easily as sending a text message.
And based on the engagement metrics they shared, this frictionless agent ecosystem is already taking root globally.
Moving incredibly fast.
Yeah. The deployment is operating on two distinct but complementary tracks: personal agents for everyday consumers and business agents for commerce.
And the traction on the business side is where the financial upside of this massive CapEx spend starts to materialize. Zuckerberg highlighted that business AI conversations have exploded, growing tenfold since the start of the year. They are now processing 10 million weekly conversations between consumers and AI agents, acting on behalf of businesses.
And it is vital to note the geography of this adoption. The transcript points to heavy expansion across Latin America, Indonesia, and the Asia-Pacific region.
Why there specifically?
Because these are markets where WhatsApp is not just a messaging app, it is the fundamental layer of the internet and local commerce. People in these regions are accustomed to texting businesses directly.
Ah, I see. So imagine you run a busy hair salon in Jakarta. Historically, you'd need a dedicated employee just to answer WhatsApp messages, check the calendar, and book appointments.
Right.
Now, an AI agent handles that entire conversational flow perfectly, 247 in the local dialect.
It's a game changer for those small businesses.
But here is the business question that naturally arises.
Yeah.
Right now, Meta is subsidizing the compute cost of these agents. They are largely free for the users and free for the businesses to deploy. At a $145 billion run rate for infrastructure, how exactly do the unit economics of free AI compute ever pencil out? When do they flip the monetization switch?
It is the classic Meta playbook executed on a grand scale. We saw it with the transition to mobile, with the acquisition of Instagram, and with the rollout of Stories.
Build it, scale it, monetize it.
Exactly. You subsidize the compute to capture the interaction layer. You offer a world-class product for free, which rapidly scales it to 1 billion users and effectively starves smaller competitors of oxygen.
Right.
Once the tool becomes an indispensable utility for both the consumer and the business, you introduce monetization.
And Susan Lee's commentary provided the exact roadmap for how they will extract value from this ecosystem. Let's look at the business side first. She introduced a product currently in open beta called Meta Ads AI Connectors.
This is a phenomenal piece of vertical integration.
It really is. Explain how an AI connector bypasses the traditional advertising agency model.
So traditionally, a mid-sized business would hire a marketing agency to manage their Meta ad spend. The agency creates the creatives, targets the audience, monitors the daily spend, and adjusts the campaign based on performance.
A lot of human hours.
Exactly. Meta Ads AI connectors eliminate the agency. The business simply connects their Meta ad account directly to a specialized AI agent.
Wow.
The AI continuously analyzes the conversion data in real time, generates new ad copy, dynamically allocates the budget to the best performing demographics, and optimizes the entire campaign autonomously.
It's an AI marketing director that lives natively inside your ad account and never sleeps.
Never.
And businesses will gladly funnel more of their budget into Meta's platform because the AI guarantees a drastically higher return on ad spend. The transcript offered hard proof of this strategy working via the value optimization suite.
The numbers on the value optimization suite are staggering. Susan Lai noted that this suite of automated conversion tools now has a revenue run rate of over $20 billion, having more than doubled year over year.
$20 billion. That proves definitively that when Meta provides automated, AI-driven tools that measurably drive sales, businesses will aggressively increase their ad spend.
It creates a closed loop of value.
Yes. The Muse Spark model powers the business agent on WhatsApp that talks to the customer. That same model powers the AI connector that optimized the ad the customer originally clicked on. Meta owns the entire funnel, and the AI handles the friction at every step.
It's brilliant. But, Meta's ultimate ambition extends far beyond optimizing mobile ad conversions.
Right, they want to escape the phone.
Exactly. The constraint they face right now is the physical form factor of the smartphone. The smartphone requires the user to look down, disengage from their physical environment, and tap on a piece of glass.
Which is inherently limiting.
Meta wants to break the superintelligence out of the phone and integrate it seamlessly into the physical world.
Which transitions us to the hardware division, Reality Labs, the physical supercomputer. Historically, Reality Labs has been the division Wall Street loves to hate because it burns billions of dollars annually researching virtual and augmented reality.
And looking at the Q1 top-line numbers, the skepticism seems justified. Reality Labs posted $402 million in revenue, which is actually down 2% year over year.
Right. The top-line decline is entirely driven by sluggish sales of the Quest VR headsets.
Yeah, the bulky, fully immersive virtual reality devices are facing serious market friction. But underneath that top-line number, there is a massive, highly strategic divergence occurring within the division's product lineup.
Right. The VR headsets might be collecting dust, but their AI glasses, specifically the Ray-Ban Meta Optics, are surging in popularity. Zuckerberg noted on the call that the number of daily users for the smart glasses has tripled year over year. Why are consumers suddenly adopting face-mounted hardware when VR has struggled for a decade?
Because Meta solved the social friction problem. Wearing a VR headset isolates you. It is socially awkward to wear one in public.
Oh, completely.
The genius of the Ray-Ban Meta glasses is the Trojan horse strategy. They partnered with EssilorLuxottica to build technology into a form factor that has been socially acceptable and stylish for 70 years. The classic Wayfarer.
People already want to wear them.
Exactly. The glasses are lightweight, designed for all-day wear, and they don't make the user look like a cyborg. But embedded inside the frames are high-resolution cameras, directional microphones, and speakers that are directly linked to the Meta AI assistant.
Zuckerberg explicitly called it one of the fastest-growing consumer electronics categories they've ever seen. And they are doubling down on the ecosystem.
Yeah, they tease an upcoming integration with Oakley to capture the sports and performance market.
Right, and they discussed the future rollout of glasses with integrated holographic displays. But the piece of hardware mentioned in the call that genuinely feels like science fiction becoming reality is the Meta Neural Band.
The Neural Band is the bridge between human intention and digital execution. It is a wrist-worn device that utilizes electromyography, or EMG.
Electromyography. Let's break down the biology and the technology of how that actually works. Because it sounds like telepathy, but it's grounded in pure anatomy.
Exactly. When you decide to move your finger to swipe a screen or click a mouse, your brain sends an electrical signal, an action potential, down the motor neurons in your arm to the specific muscles in your hand.
Okay.
Electromyography uses surface sensors on your wrist to intercept and read those microvolts of electricity before the physical movement even occurs.
So the band isn't tracking the physical motion of your hand in space using like accelerometers.
Yeah.
It is reading the raw electrical intent traveling through your nervous system.
Yes. And because it is reading the electrical signal, you don't even need to physically move your hand.
That is wild.
You can make a microscopic, imperceptible twitch of a tendon, and the neural band decodes that specific electrical pattern as a command. This allows the user to control their AI glasses, scroll through menus projected into their vision, or type messages silently without ever lifting a finger or speaking a word out loud.
Let's put those two pieces of hardware together in a real-world scenario. You're walking down the street wearing the smart Oakleys and the neural band. The cameras on the glasses provide the AI with continuous visual understanding. The AI sees what you see.
Right.
You glance at a restaurant across the street. The AI reads the menu in the window, cross-references it with your historical interaction sequence, knowing you love Italian food and have a reservation free tonight, and softly whispers into your ear via the glasses' directional speakers that the restaurant is highly rated.
It's incredible.
You decide you want to book a table, so you subtly flex a muscle in your wrist. The neural band reads the EMG signal, confirms the action, and your personal agent automatically messages the restaurant to secure the table.
It is an entirely frictionless, closed-loop interaction with the physical world, mediated entirely by Meta's AI. The value of the data generated by this hardware is incalculable.
How so?
Well, when you use your phone, Meta only knows your digital intent. When you wear their glasses and their neural bands, Meta gains access to your physical context.
Oh, wow.
They know what captures your visual attention in the real world, how long you stare at a product on a physical shelf, and the precise moment your nervous system decides to engage with it.
But to run an ecosystem of that complexity, where the AI is simultaneously processing real-time visual feeds, decoding neuromuscular signals, and running predictive algorithms against a decade of your digital history, the underlying models cannot just be static software.
No, they can't.
They have to be capable of dynamic, continuous evolution. And that brings us to the final and perhaps most profound topic of the earnings call, the holy grail of AI research. Recursive self-improvement.
During the Q&A, an analyst probed Zuckerberg on the long-term roadmap for the Meta superintelligence labs. Zuckerberg acknowledged that while the current Muse Spark models are highly capable, their learning is still bottlenecked by human interaction. They require human engineers to fine-tune them and human users to generate training data.
Yeah.
He stated that for Meta to achieve its vision of personal superintelligence, the models must eventually learn to improve themselves. He called recursive self-improvement a table stakes requirement for the future.
Let's define the mechanics of recursive self-improvement. Right now, if an AI model exhibits a flaw, say it hallucinates a fact or writes inefficient code, a human programmer has to diagnose the issue, write a patch, or feed the model higher quality training data.
The model is passive.
Exactly. Recursive self-improvement means the AI model is capable of diagnosing its own flaws, writing the software code to fix its own architecture, and then deploying the smarter version of itself.
Yes.
That new smarter version is then even better at finding flaws in writing code, creating an exponential feedback loop of intelligence growth.
And Zuckerberg made a crucial point here regarding the scope of that self-improvement. He noted that while an AI writing its own code is impressive, it is only a fraction of what is required.
Right.
For a model to truly evolve autonomously, it needs to master synthetic data generation. When the AI exhausts the available human text on the internet to learn from, it must be able to run complex simulations, gather novel data, test hypotheses, and optimize its own neural pathways without any human oversight.
It represents a shift from AI as a tool to AI as a self-optimizing system.
Exactly.
But if we extrapolate that capability out to its logical conclusion, it raises a massive, immediate question about the human workforce.
It really does.
If I am an engineer and I hear that the CEO of my company is pouring billions into building an AI that can write its own code, test its own hypotheses, and manage its own architecture, what is my future at this company?
Well, the transcript actually gives us a very clear empirical look at how Meta is answering that question internally.
Let's hear it.
You have to look at the headcount numbers Susan Lee reported. Meta ended Q1 with approximately 77,900 employees. That is a 1% decrease from Q4 of the previous year.
Okay.
And more tellingly, she explicitly mentioned plans to further reduce the size of the employee base moving into May.
Let's contextualize that. Revenue is up 33%. Margins are at 41%. They're deploying $145 billion in capital expenditure. The company is operating at an unprecedented scale of ambition and profitability.
And yet, they are actively shrinking the human workforce.
The traditional correlation between corporate growth and job creation has been completely severed.
Because artificial intelligence is fundamentally transforming the unit economics of human labor within the company.
How so?
Zuckerberg highlighted specific internal examples where 1 or 2 senior engineers equipped with specialized AI agents are designing, coding, and deploying products in a single week that previously would have required a team of dozens of people working for several months.
1 engineer operating with the output of 30. The productivity leverage is staggering.
Meta is actively prototyping the corporate structure of the future. They are moving away from massive pyramids of middle management and junior coders.
Right.
Instead, they are building a model where a lean team of elite engineers act as orchestrators. The human is no longer doing the manual coding, the bug testing, or the grunt work. The human is the manager directing vast fleets of digital employees to execute complex tasks.
Susan Lead referred to this as their commitment to a leaner operating model.
Exactly.
If you are a business leader listening to this earnings call, the signal being broadcast from Menlo Park is unmistakable. The era of scaling a business by endlessly hiring human capital is over.
It's done.
Highly AI-leveraged, hyper-lean workforces are the new standard for high-margin capitalism. The most valuable skill in this new paradigm is no longer knowing how to write the code. It is knowing how to strategically direct an autonomous system that writes the code faster and better than you ever could.
It is a profound macroeconomic shift, and Meta is proving out the model in real time.
As we pull back the lens on everything we've dissected today, from the accounting anomalies to the neural interfaces, we need to arrive at the ultimate takeaway for you, the listener.
Yeah, the Q1 2026 earnings call is not a snapshot of a social media company selling ads. It is a declaration of intent.
If we trace the through line, Meta is utilizing a wildly profitable ad machine, one that is currently extracting unprecedented value by using deep sequence algorithms to predict human behavior, to fund an Apollo-level infrastructure build-out.
They are buying the chips, building the custom silicon, and securing the power grid to dominate the physical layer of the internet.
And they are using that massive compute advantage to train models like Muse Spark, which power an ecosystem of frictionless agents. Agents that will soon live inside stylish glasses on your face, reading your neuromuscular intent, and seamlessly mediating your interactions with both the digital and physical world.
They are building a vertically integrated reality. They own the hardware you wear, the software you consult, the algorithms that predict your desires, and the data centers that process your thoughts.
Zuckerberg stated that the ultimate goal of this superintelligence is to develop a first principles understanding of what you care about in order to help you achieve your goals faster and more efficiently.
Which, on the surface, sounds like the ultimate luxury. A tireless, brilliant assistant dedicated entirely to your personal success.
But I want to leave you with a final provocative thought to mull over.
Let's hear it.
If you are wearing a device that watches everything you see and hears everything you hear, and it reads the electrical signals of your nervous system, anticipating your physical reactions before you even consciously process them.
Right.
And it possesses a mathematically perfect memory of your behavioral patterns stretching back a decade, knowing your aspirations, your habits, and your psychological vulnerabilities better than you know them yourself.
And crucially, this system controls the flow of information you consume and algorithmically curates the opportunities you are presented with to achieve those goals.
Exactly. If the AI is managing all of those variables, seamlessly optimizing your life for maximum efficiency and frictionless commerce, who is actually steering the ship of your life? Are you still an autonomous individual pursuing your independent aspirations? Or are you simply following a highly optimized, predetermined path paved by a $145 billion algorithmic machine?
It is the defining tension of the next era of technology. The line between algorithmic assistance and algorithmic determinism is becoming remarkably thin.
Thank you for joining us on this deep dive into the architecture of our immediate future. We encourage you to keep questioning the mechanisms behind the screens, keep looking beneath the headline numbers, and always consider the true cost of frictionless technology. Until next time.